So I think this most recent rally, as Mike was just saying, has been catalyst driven, right? If you look at what happened, not only have we seen significant speed in what the Fed has done and what Congress has done. I mean, before, if you looked at the Great Recession, it took them a whole year before they've actually done as much as been done now. So I think that that's been important. And then they've come in well above expectations. I mean, look at today. The surprise was that they included high yield bonds. Most people weren't looking for that. So I think to move higher, we're going to have to see some other catalysts. And I think the next catalyst for the market is going to have to be some form of therapeutic so that we can get the discussion started on how we can start reopening the economy.
Stephanie, do you agree? Is that the next catalyst?
Well, I actually think earnings are going to be some form of catalyst. I don't know if it's going to be positive or not, but and I have been saying all along you have to write off 2020 in terms of earnings and also in terms of the economy, right? So now we have to start thinking about 2021. So because the conundrum that we're in right now is that we do have the market at attractive levels, and certainly there are certain sectors like value, like small caps, like some of the cyclicals. They're very, very cheap and very depressed, but you don't have the visibility, and so you have this limited visibility on earnings, limited on the economy, and yet very, very negative sentiment and depressed valuations. And so I think which is going to win out? I think the earnings story, or at least the commentary on the conference calls, will certainly be of help.
Now, earlier today, Microsoft co-founder Bill Gates was on Squawk Box saying he doesn't see the economy reopening anytime soon, despite some U.S. cities nearing a peak in coronavirus cases.
Some places are near their peak. But just because things start to come down, that's not the time for opening up. The absolute level has to be very, very low, and you have to have a new testing system that prioritizes seeing any new cases and doing contact tracing, quarantine enforcement. That the Asian countries are great examples of doing that in a very strong national level approach.
The full interview is on CNBC.com, highly recommended, about 25 minutes long, and few people as educated as Bill Gates on this topic. Mike, the other points he made about the reopening of the economy was that it would be highly piecemeal when it comes, and that we're not going to get a fully open economy until there's a vaccine, which he said from start to finish is 18 months, and hard to expect it to come quicker than that. So maybe best case scenario, 12 or 15 months from now. I mean, again, we'll go back to a similar point we just discussed, but this equity market, which is now down 10% year to date for the Nasdaq, is sort of pricing in that the economy is going to be back and going within a quarter or two, not 18 months from now.
Well, probably at least starting to get back within a quarter or two. I would not argue with that. I mean, you can slice it many different ways. The S&P is still where it was, well over 2 years ago. So it's not as if we're back at the extreme highs. But I do agree, at some point there is room for disappointment about the character, the strength of the economy coming ahead. It's interesting. Without having any real economy, being permitted to operate right now, and therefore no expectations about how it's going to operate, it's almost like there's this blue sky effect where you can't be disappointed by it because you don't expect anything of it. So that will probably change down the road, and depending on where the market is trading and what's happening in the rest of the world, let's remember, it's not just the U.S., then I do think that it might be a little bit tougher to get the next 600 points on the S&P to the upside than it was to get the last.
Yeah, and Larry, certainly you just made the point about breakthroughs in healthcare technology, just a few moments ago, which I think correspond really well with this conversation, this interview with Bill Gates. I'm curious, though, we had jobless claims today, 6.6 million. In the last 3 weeks, we're now up to nearly 17 million jobless claims, and yet the market seems to have shrugged it off. Why? And at what point does that actually start to factor in to investor sentiment as well? Or is it already priced in?
So I think it was already priced in. And I think the fact is that the market's a forward-looking indicator. And if you think about it, historically, the market tends to bottom about 4 months before the recession ends. So if you think we're starting to get back to normal, turning the corner by the August-September period, now's about the time where you start to price in that next movement up, at least, or a recovery in the economy. And our healthcare policy analyst thinks that there's a 40% chance that we could start to turn the corner by Memorial Day, and an 80% chance that we start to turn the corner by July. So that August-September time period, you could start to see the economy slowly starting to pick up. But I will say that we are looking with what Bill Gates was talking about, a U-shaped type of recovery, not necessarily a V-shaped.